Part two of the Aussie trade. So we locked in the money, essentially 1 hour, and we have moved the stop loss to the entry point to cover permit and a little bit lower to cover commissions. The scenario now is, as I stated in the prior video, is we've got this. It's not an ideal scenario given that we didn't get a break of structure in any of this. Not really. Now, the London session lows are what we're trying to get below. And it would have been great to have seen that on this leg, but we haven't had that. Now, we've got 20 minutes or so until the 15 minutes or so, no, sorry, 20 minutes until the cash open. And if we're going to see a blow off, that is most likely the time of the day that it's going to happen. We've got this M formation, and given these lows and the inability of the market to really penetrate, we're more than likely going to see a surge higher before coming down. So that's just something to bear in mind. But we don't care. We've got our risk management rules in place, and that's what we are. We're managing risk. We're not trying to tell the future, although preparing for it is certainly what we need to be doing. But playing the probabilities. But we can see this potentially moving up, and as I said, rolling back over. So we've got the stop loss placed a touch above the 61.8. So commonly with these M formations, not so much on the 15-minute chart, but more so on the 1 hour and the 4 hour, but it is a phenomenon that can turn up on the 15-minute chart. We have a retest of the neckline, which is up here, which meets the 61.8. So there is the risk of that. So just an update on that, and we'll wonder about adding to the position if we can see for instance, if this were to be a 15-minute inside bar followed by a subsequent engulfment, then that would be a setup in itself for a scalp lower. So we could add to the position on that basis around the cash open for a move to 70.50 or thereabouts. So it's something to bear in mind. So on that note, we'll try that out, and let me just I'm going to clear up this. Well, I'll clear up the chart to some extent and see if we can't predetermine where we would want to get involved again. Yeah, so that's what we'll do. We'll wait and see if we can get an engulfment. If we get an engulfment of this candle, so we've got a minute left. It looks like it's going to turn out to be a doji. And then if it moves up from there, then the thesis is invalidated. But if this closes a doji as a pin, hammer, whatever you want to call it, and if we get the engulfment lower that closes below the London session lows, then we're game on for adding to the position. So 5 seconds away from this closing as we want it to close. Great. Now we want this new 15-minute rotation to really show us that the bears are in control, surging lower and then closing below this. So we've set the alarm. It's going to surge into support, close below these lows, and we're looking for a scalp but we can leverage up on into our target area, moving quite quickly to a break-even scenario, because the closer we get to target, the more likely we're going to see balls coming in and quite easily whip us out at a loss, and then essentially make this trade pointless and a waste of time. If we start effing up on our scaling in, trying to size up on the trade, it could quite easily turn pretty nasty and turn on us. So it's a skillful um, procedure. So quick update then. So we got the break of structure, but we didn't get the close on a 15-minute basis. So that's quite a nice rule. Had we been, if FOMO kicked in and you're chasing that parabolic sell-off on the shorter time frames, so for instance let's go to the 5. So you've seen that break of structure over here, and you're desperately trying to get in thinking this is just going to blow off. Well, look what would have happened. You would have been stopped out if you stopped it being up here above liquidity, above where in liquidity. You would have been stopped out. So we'll see. We've now got sort of 8 minutes until the new 15-minute candle rotation and the Wall Street cash open. So this is nice so far, so long as this holds as resistance, that the price has moved up into the shorts on a short squeeze ahead of the cash open. So therefore the path of least resistance for the cash open is to the downside, so long as we can stay on the front side of this bearish. Well, we're not, unfortunately. So we closed above. So it's more than likely, in fact, that this will just keep moving up. Not what we want. We didn't want to see that break of trend. So it's been broken. But if we can hold below the 61.8 into the cash open, then that could be our savior. Right, so are we going to see? So we're 10 minutes into this cash open. As I said, we've moved up. Could be the stop hunt for the blow off, before the blow off. Great if we can get this close with 3 minutes, 4 minutes to come in. So I've just moved over to a 15-minute time frame. Now we're still on the front side of the more dominant bearish trend. 55 seconds for the close. So we've seen the initial spike up 15 minutes into the cash open. Now we're looking for an engulfment to the downside to enter on the next 15-minute candle. Unfortunately, it's a pretty firm bullish correction. 3-line strike, and quite easily continue into the trend line and stop us out on our original position for the next 15-minute candle. Right, we've got 30 seconds for this close. It'd be nice to see this turn up as a doji and then a subsequent drift and then burst to the downside. Okay, so we're out of that trade, and that's fine. Now, so this could be considered potentially as a raid. With this broken, these equal lows being raided. Um, we've had a potential change in structure here, so we could be buying to go up, um, to move in on the highs of Asia.